why it's so important is this crypto opportunity is literally the perfect macro opportunity of a lifetime. It's been the best performing asset class of all time. It won't go into infinity doing this, but this is a very high probabilistic outcome that the next 2 years make life-changing money. Have a plan and write it down. Write it down because you will lose your mind in the middle of a crypto bull market. The easiest way is to be the moron who buys and holds. It's just the easiest strategy in a market that does, on average, like 140% a year in the largest asset. People don't know the weight of it. So people are cynical, like, oh yeah, he's cracked some secret code. I'm like, Jesus, I've written that so much so that I'm probably going to be writing a book on the whole thing because there's so much. So I think ETH outperforms Bitcoin. So Bitcoin goes up, ETH outperforms Bitcoin, Solana outperforms ETH, and something else is going to be the Solana of last cycle, which was the rocket ship.
Today's interview is a masterclass with the macroeconomic expert Raoul Pal. Raoul has been ridiculously accurate with his predictions on the crypto market over the past 2 years. If you want to know where Bitcoin, Ethereum, Solana, and the rest of the crypto market is heading in 2024, this is a video for you. Before we jump in, this is a new channel that we've launched to host the best of the best in the crypto space. Today we have Raoul, next we have Michael Saylor. If you want to become a better crypto investor in 2024, be sure to hit that subscribe button. It's completely free. Finally, if you like what Raoul has to say, be sure to check out Real Vision. It's the first link in the description. It's currently giving away free Solana NFTs, and Real Vision will undoubtedly change your financial future. Hit that first link in the description. But without further ado, let's jump in with Raoul Pal.
Great to be here, Jamie. Looking forward to this.
Awesome. Perfect. So let's jump right into things. Yesterday, we saw probably the biggest moment in Bitcoin's history with the approval of a spot Bitcoin ETF. And as I'm sure you saw, it was a complete circus. The SEC got hacked. We had the approval. They pulled the approval. Then the SEC website went down. Gary Gensler, he got salty about it. And then we saw trading today. I want to hear your initial reaction to the insanity that was the Bitcoin ETF launch, and then the first day of trading.
Well, the launch, I think I used the phrase on Twitter, go rodeo. It's like, it was so comical in everything that went on that, what's funny is the TradFi people must have been looking at this going, what on earth is this about? But all of us who've been in crypto for a while was like, this is perfect. It's a total shit show. Nobody knows what's going on. Everybody's laughing. Everybody's memeing the whole thing. It's like, for me, it was absolutely perfect. Because don't forget, TradFi's joining our world here. We're not joining theirs. They're joining ours, and it's our world, and we run it via memes. We run it with humor. We run it in all these ridiculous ways, and that's that. Today was their day, which was the launch of the products, which was huge volumes, and a lot of people will be wondering, well, why didn't Bitcoin go up more? And it's interesting, I was just on with Hunter Horsley from Bitwise, and I was speaking to Eric Balchinas earlier today. A lot of the GBTC orders, don't forget, a lot of hedge funds were buying it at a discount and hedging. And today it collapsed to zero because it went to an ETF. So there's a lot of selling of Bitcoin that was coming out of that. So there might have been $1 billion of selling that came out of that. So as people were unwinding that trade and taking it off. So that's why the market was a lot choppier. It's not really people taking profits. It's people taking profits from that particular trade and exiting some of GBTC. So that makes more sense of it for people. People are like, well, why didn't it happen? The laughable thing was how obvious it was that the market, I love the way the market goes, well, now we've got the Bitcoin one. Where's the ETH one? ETH starts wildly outperforming. It's like, again, hilarious. The market doesn't give it 1 second before moving on to the next thing with the typical crypto ADHD way of doing things, which is, this story's over now. Let's move on to the next one.
100%. And to give credit where credit is due, I saw you calling this months ago. You were the first person to say, as soon as the Bitcoin ETF is approved, the narrative will immediately switch. And then on approval, we see a bit of Bitcoin choppiness and we see Ethereum up 10%. So you absolutely nailed that call. So were you surprised by the price action, that Bitcoin choppy and Ethereum booming, or that's exactly what you expected?
That's exactly what I expected. Only because I lived through the late 90s in the IPO world, when IPOs really worked. For a long time recently, IPOs like the Coinbase one marked the top, stuff like that. But back then, when you've got a market that people were really engaged with, what would happen is there was the people who were the early stage investors. So we've had that in Bitcoin, and this is like their IPO. But all of these ETF companies have been selling this product in advance. So today you're going to see massive volumes, people taking trades off who were speculating on the ETF, all of this stuff. So the new volumes come in, people taking stuff off. So there's lots of churn. And that then usually calms down. And then it's the process of, so if you think in the old IPO world, when Yahoo comes out or something as the new IPO or Google or whatever, what would happen is, so it launches, then the investment banks would have their analysts do the research, then they put their buy recommendation, then it starts really happening. And so you'd often get a hot day one because people couldn't get into the IPOs. It would then calm down, correct quite a lot. And then there's this period because, look, regular people don't care what's just happened. It matters to us. It matters to these ETF providers for the customers they've got. But the average Joe investor or average Jane, they don't really care yet. But it'll filter down as they'll see more reports on it. Their investment advisor will tell them about it. And then before you know it, it starts building momentum. They see the price rising and they all come in. So that's my general mental model here.
So as it picks up, I've seen a whole bunch of different projections of what kind of inflows that we see in the first year. I've seen from Eric and James, the Bloomberg ETF analysts, they're projecting somewhere around 15 billion. I saw Standard Chartered release a report this week. They're projecting 100 billion. And I see some crazy stuff. Mark Yusko thinks we'll see 300 billion. You have much more experience in the financial world. Do you have sort of an idea of in the first year? I think we saw 4 billion today, but then is that just day one craziness and we see a dip and then it slowly builds back up? Or what do you see?
So I think volumes will slow down. Let's assume tomorrow is like 500 million, whatever it is, right? It's going to be a lot less. But I said this about a year ago. I said, well, the Bitcoin ETF all depends on where the Bitcoin price is when it launches. And I said, look, if it's about 50,000, I randomly chose that number and it's right there.
Yep.
And not because I'm a prophet or anything, but I was like, well, if it's around 50,000, people are just going to go, well, it's not far to the all-time highs. I want to get it before it gets to the all-time highs. And that momentum cycle starts. Because price is the driver of narrative, is the driver of volume, is everything in this space. So it's kind of come at a perfect time. And then let's say it goes quiet for a little bit. And then we get the Bitcoin halving noise, and then the crypto, the macro cycle, the rate cuts. That's all to come ahead of us. The liquidity cycle, all of that. So it could not have come at a better time. So I think the probability is it does better this year than people expect. So I think Eric and everybody else, their job is to be conservative. As I said, I just spoke to Hunter Horsley from Bitwise, just interviewed him. He was like, well, I don't really know, maybe it'll do 20 million. They think 55 million in 5 years. I think we'll do 50 million this year. 50 billion this
50
year.
Billion. Okay.
Because of this kind of hype cycle of where we are in it. It's possible to be more. I mean, I don't see why not, but it just depends how this hype cycle plays out.
50 billion, we send out a daily email just covering the crypto market. And we worked out if you multiply all the Bitcoin that is currently held on exchanges by the current price of Bitcoin, that at its current price is only around 100 billion that all the exchanges currently have on there. So 50 billion would be enough to hugely increase the price. So,
but again, let's go to the other scenario, right? And say, what wouldn't surprise us by the end of this year? Could Bitcoin be at 100,000? Yeah, that seemed right for a normal bull market. So, okay, that's a 2.5x from here or 2x from here. it doesn't seem impossible, which is why I've also been talking about this could be quite a bit of a bubble cycle, whether it's front loaded, so it all happens in this year, or whether it really overextends like some of the prior cycles did. I think that's possible here, so we just have to wait and see.
Yeah, true. Speaking of Hunter that you were just on with from Bitwise, I'm not sure if you saw, it went somewhat viral on crypto Twitter this week, but they released a report. They surveyed over 400 financial advisors in November and December of last year. And it was this insane stat that only 39% of financial advisors in the US were expecting a Bitcoin ETF to be approved in 2024. When I saw that, my mind was just kind of blown, because anyone that's even a little bit in the crypto space or paying attention to Bitcoin knew that there was a 90% plus chance that we were going to see an approval this month. So I wanted to ask you, like, how is this possible? Is Bitcoin still a really tiny part of the financial system? Is it still flying under the radar? Like, how do only 39% of financial advisors in the US were expecting this to happen?
So I'm going to ask you to not be yourself and be somebody else. Imagine you are in Indianapolis or Cincinnati, and you're a 58-year-old financial advisor who puts on a jacket, has dinner at the same steak restaurant with his clients. He's not on Twitter. He has no understanding. He might watch a bit of Fox News. He has no real understanding of what's happening. And so you're imposing yourself and say, well, how the hell don't you know? Twitter's been talking about this for 3 years, He doesn't even know what Twitter is. If he does, maybe he's following his sports team. So you've got to understand the mindset of what you're dealing with here. You're dealing with middle America on the whole, and it's the country club and the golf and they read the Wall Street Journal occasionally to try and pretend to their clients they know something. They watch Fox News. That's who we're dealing with. Now, what's interesting is Bitwise found that not only the stats that people didn't expect it, but 88% of people who were going to buy crypto were going to wait for the ETF to come. So they didn't expect it. It's now come. They now have to go to their clients. This lag I talked about. They have to go and have golf with their best clients and sit down and have that steak dinner and the bottle of expensive wine and say, you should be buying some Bitcoin. They don't go send out through some electronic platform. It's this. That's what we will see. And then they will get the incoming calls from their friends at the golf club who've heard it from their other friends that they're making money in this Bitcoin thing. Get me in. So,
yeah, when people ask me, am I too late to Bitcoin? Am I too late to crypto? You see stats like this come out and it's like, you are still so early, which is insane. Because you get in an echo chamber, and as you said, you sit on Twitter and you don't realize how small a percentage.
You don't realize there's basically, I don't know how big crypto Twitter really is, but let's call it 7. I've got 1 million followers. I don't know how many of them are truly real, but let's assume there's probably about 700,000 people that actively care about crypto, that they will be on Twitter, watching YouTube channels, doing all that stuff. That's 700,000 people out of this is a global homogenous product, same product in India as it is in Nigeria, as it is in London, as it is in Sydney. And so that's 700,000 people out of a population of 8 billion people, right? We're just a speck. And we just think,
in the bucket.
That's right. It's like, it's laughable. Is it all priced in and all of this? I'm like, nobody cares.
On the ETFs, immediately on approval, we saw Bitcoin chop around. We saw Ethereum shoot straight up, exactly like you predicted. And all eyes have now shifted onto May for the deadline of the Ethereum ETF. Now, personally, I think it's close to a 100% chance it will be approved. And I have 3 reasons, and I want to bounce them off you. So the 3 reasons is we've seen Ethereum futures ETF approved by the SEC. We also have a BlackRock ETF application, and their track record is ridiculous. It's something like 570 approvals to 3 denials or 1 denial or something insane. They're the Floyd Mayweather of getting approvals. And then finally, in the SEC lawsuit against Kraken, they named a whole bunch of different cryptos that they considered securities, but interestingly, they left out Ethereum. So I don't think they ever want to come out and say it, but it seems like they're treating it more as a commodity, or they're not calling it a security anymore. I saw Eric Balkanaus, a Bloomberg analyst, and I've also seen Cathie Wood. They're giving it around a 50-50 chance. I wanted to ask you, what do you think the odds are for the Ethereum ETF, or in the grand scheme of things, does it not even matter?
Obviously, in the grand scheme of things, none of this matters really, but let's play that game. Hunter as well gave it a 50-50. And he's been deeply involved in all of this. And he said the difference with the Bitcoin ETF is there was that court ruling from GBTC and they couldn't not do it. So he said, so you can't infer that. And there's always complications behind it. So he'd say 50-50. And so most people are saying 50-50. My personal view is actually Gensler wants ETH and BTC into the financial system. If they're the two largest assets, you want control of them by the incumbent firms. Because if not, it's a threat to have this independent financial system. It's a threat to their whole system. So even though he hates this stuff, he'd rather be frenemies than enemies. So that's my hunch here, is that regardless of what he wants, he has to accept it.
Think 50-50 is accurate, or do you want to put a percentage on it?
Maybe there's a bit of delay, a little bit of delay, not rejection, but delay, blah, blah, blah. So let's say by August, which is the second date or something, let's assume by August, we've probably got a decent chance. I would say 75% chance.
We've been talking about ETFs in the crypto world for the last 9 months. I'll give a break from that, and I'm going to jump into your thesis that you have coined the everything code. And let me just preface this question by saying, over the last 24 months in the crypto space, and I follow everyone, you have been spookily accurate. And I want to have 3 major calls that you have absolutely nailed. And I think it's in part because of the everything code, or due to the everything code. The first one was you called the ETH bottom in June of 22. And then you also called the Bitcoin bottom in November of 22 because you saw liquidity bottoming. And then in 2023, you called Solana to be the fastest horse in the race, which it 100% was. It at one point in the year was up over 1,000%. Like, that was a profit call, insane. And then finally, you called the Ethereum rally as soon as the Bitcoin got approved. I'm getting a little freaked out with how spooky accurate your calls have been. So for the people that haven't heard, maybe they're a bit more new into the crypto space, could you explain sort of in a nutshell your everything code thesis and how it allows you to make these incredibly accurate projections into the future?
Just because I'm accurate now doesn't mean I always will be.
Okay.
But listen, what's beautiful about the everything code, before I explain what it is, all on crypto Twitter is everybody is a mid-curve. That mid-curve meme, right? Arguing with each other about what is liquidity, what is that, is there a recession, blah, 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 all day. It's overvalued, this. The liquidity curve, the everything code just says liquidity in, I buy it. That's it, right? And liquidity in drives assets, and the more liquidity, the more people take more risk. Simple as that. That's the understanding. So when you see liquidity bottoming, it allows you to start looking at ETH was in that free fall then, but it maps perfectly liquidity, and liquidity had bottomed. I'm like, okay, this is a probability. Yeah, you got a chart pattern as well that it all matches. So that liquidity cycle makes it super easy. But the everything code is really the culmination of 30 years work. But what most of us didn't understand was 2008, the entire world changed. We know it broke. We know the debt system broke. And people have been trying to look at the world ever since, including myself. I only figured this out like 2 years ago. And the everything code I only wrote last year. is that something fundamental had changed because of the use of the balance sheet and liquidity to manage things. What I found back in 2020 was that the use of the balance sheet particularly was not about putting fresh money into markets. It was about debasing the currency. So what happens is the price of scarce assets stays the same, but the value of the currency and its purchasing powers of these scarce assets goes down. Now, it's very different than wages, because wages are a variable asset like corporate earnings. So this is why stocks get more expensive, because earnings don't go up as much as the debasement of the currency. Same with wages, is why the rich get richer and the poor get poorer, because the rich own these assets. But in 2008, when the world blew up, we had some sort of debt jubilee, a forgiveness. And the forgiveness wasn't the total debt, it was on the interest payments. Everybody around the world said, right, interest rates are zero. So nobody had to pay any interest. And people didn't look at it through those lenses. They're like, oh, they've created free money, they're doing that. No, what they were doing was allowing the system to survive under the weight of debt. So every government then reissued all their debts as fast as they could into like the 3 to 5 year zone. That seemed to be the perfect place for them. And everybody did it. In fact, it's like 70 or 80% of all debts by all governments are in that 3 to 5 year zone. So then what happens is every 4 years, roughly, they've got to finance this stuff. And interest rates usually rise at the tail end of a business cycle. It slows the economy. The Fed start cutting, and then they use the balance sheet to monetize the interest payments that are due, because they get bigger and bigger. They compound all the time. This perfect 4 year cycle is the same as the US election cycle, is the same as the Bitcoin halving cycle. And that is actually the liquidity cycle. And if everything is a perfect mirror, like each cycle is a mirror of the previous one, you can forecast the forward cycles. And that's what we started doing. And it's been working like an absolute charm. And it's like, it is a bit spooky. And I keep speaking to Julian Bittle, who works with me. He's like, where is this going to go wrong? We don't know. It's going to go wrong somewhere. Probably when the most number of people are following this theory. That's usually when it goes wrong. But, it's been incredibly accurate. We kind of said that the equity market would be all-time highs. It was all-time highs. We bought the NASDAQ back in October, November of 2022. It was exactly the bottom. We said that tech would be the best performing asset and crypto above it. That kind of worked as well. We use the everything code to look at the liquidity cycles within crypto and say what performs where. Well, at this point in the cycle, the first part of the cycle, crypto spring, Bitcoin outperforms, because everybody wants the safest asset because it's still a bit sore from the bear market. They're not quite sure. And then when things start improving, liquidity starts coming back. Once global liquidity year on year starts going positive, well, then ETH starts outperforming. And I put that chart on Twitter the other day. It's very driven by the business cycle. It's driven by the liquidity cycle. So I just thought, well, that looks right. And then I use a bit of technical analysis to figure out, okay, is it about the right timing? So it's that driving it. And Solana was just a piece of luck, because there's always going to be one breakout, like Ethereum was the last cycle, right? And I had been following the Solana narrative and looking at the charts of the Solana ETH cross, thinking, even though it's selling off, it was like in this pattern that looked like it was going to break at some point, and it was diverging. And then I had been at some very fancy private event in Utah by some boutique investment bank, and I met Tolly, and I saw the kinds of people he was speaking to. They were like, the head of YouTube and the head of Instagram and the head of Yuga Labs. And that, I'm like, that's interesting. So this is not like a normal chain. This is like, these people know what they're doing. And I own some Solana, a smaller bit. But then I started buying in the sell-off, because I'm like, this is not going to zero, in the big Solana collapse. I started too early, actually. I bought it in June in that first collapse. I wish I'd bought it even later, and I bought some later on when it got down to the $10 level. But really, it was me going to an event randomly. And a friend of mine I really, really trust called Colleen Sullivan, who's at Brevin Howard, the big giant hedge fund. She started talking about Fire Dancer. I'm like, I don't know what this is. And then Tolly was the next speaker. I spoke, and then Tolly was the next speaker, and he was talking about Fire Dancer. So I went down the rabbit hole that weekend. I got home, and then I realized, oh my God, this is a game changer. It moves the TPS from a theoretical 65,000 to theoretical 1.2 million, which is fast enough for the entire high-frequency trading markets and financial markets. That and the compressed NFTs, I'm like, this is the trade. That weekend, when I'd looked at it, just got back from that Masari event, it broke out. And it's just been a fucking rocket ship since then. I didn't expect it to be up 10x, let's put it that way.
Okay. My dad also watches you, and I had to come home for Christmas and had to see him. And as soon as you called for Solana, that it was going to perform well, he put a decent amount of his portfolio, and he absolutely murdered my crypto portfolio, and he's barely in it, and he would not let it rest over Christmas. He kept showing me his portfolio and how he was absolutely destroying my returns, and I was just like, I should have listened to Raoul. I should have listened.
That is justice for him. I respect him for that. Trolling his son for being not as good as him at trading crypto. This is good.
And he probably pays 1% of the attention that I do to crypto, and he just destroyed my returns last year in the market. Going back to the everything code, I think I'm shocked that it doesn't have more attention because, as you said, it has been spookily accurate since you released it, and then following it up until now, it has been spookily accurate. You did do a masterclass that I'm going to leave in the description because I think everyone should watch it. And you had, using the everything code to model and predict future asset prices, you had a few projections that you had, and I'll read them off. You have Ethereum to hit 5,300 by May of 2024, Bitcoin to hit 218,000 by May of 2024, and then go on to 520,000 by the end of 2025. And even you in the masterclass said that it sounds insane and you have to apply Raoul is a moron 50% tax. But I just want to ask you, it's been spooky accurate up until this point. What is your confidence level in its ability when you're looking at these numbers that is projecting into the future? Are you like, that sounds about right? Or are you like, let's see what happens?
So the reason why most people don't really know it is because most of this work, hundreds of pages and thousands of hours is all in Global Macro Investor, which nobody gets to see because it's expensive, everything else. So I give out bits of it, but people don't know the weight of it. So people are cynical, like, oh yeah, he's cracked some secret code. I'm like, Jesus, I've written so much so that I'm probably going to be writing a book on the whole thing because there's so much. So there is a lot of work. But to be fair, the everything code, when we first developed it, had ETH at all-time highs by the end of last year, and it didn't do it. But it got the NASDAQ dead on and the S&P dead on. So, yeah, that's why I discount it. It's like, the idea is not to make perfect projections. The idea is to give us a range of understanding of how it should do. Is it going to perform well? Yes. Could it be ridiculous that by the end of 25, Bitcoin's 500,000 to 1 million? It's possible. But I would say that's probably a 20% chance. The 60% chance is probably, 80% chance is probably somewhere between 150 and 300,000 for the end of the cycle. So, and that's why I'm discounting it. But let's see. It depends. Is as much liquidity as we expect coming into the cycle? There's a lot to prove out. It's a theory. It's a thesis, a theory, and it's not like here's the exact code to everything. We think it's, it's a curve that captures, I think, most of the distribution.
Well, it's been fascinating following it so far, and it'll be fascinating to follow it to see how it works out in 2024. And it's the crypto. Like, there's such a huge variance in what could happen. I think I've been in it since 2016, and I don't think anything would surprise me to the upside, to the downside. So, but it will be fascinating to follow the story.
But the hard thing, as you know, is it's most people are sensible and can understand projections, forecasts, ranges, but there's a large group of people who don't, and they get angry if they don't get it because maybe they didn't make the money they want, maybe they made their own mistakes. Everybody's in control of their own money. Nobody else is running their money for them. these forecasts are just forecasts. They're just best guesses by people, and it doesn't mean they're right or wrong. And as long as you can understand that, it's great. But, I try not to give out forecasts really, because the last wave of people, they just follow it blindly, and that's wrong.
I think the way to look at it is it directionally right? And don't get tied down into specifics, because it's crypto. There's so much variance, so many variables going into it. Now, we touched on Solana a little bit, and you backed it to be the fastest horse in the race in 2023. I wanted to ask you, are you backing it to be the fastest horse again? I see you talking a lot about Ethereum. Ethereum was your pick back in 2021, which also was a incredible call because it did far outperform Bitcoin. You said Solana was a bit of luck, a bit of being close to the people in the Solana ecosystem. Yeah. Are you backing it to be the fastest horse in the race in 2024? Or are you looking at Ethereum?
And this is difficult for people to understand, because as soon as I talk about Ethereum, they're like, he doesn't love Solana anymore. It's like, no, love all of my children. I just, one is just now about to go to university, and that's Solana, right? And, so I think ETH outperforms Bitcoin. So Bitcoin goes up, ETH outperforms Bitcoin, Solana outperforms ETH. And something else is going to be the Solana of last cycle, which was the rocket ship. Who knows? Is it Celestia? Is it one of the ones we don't know that everybody else gets? I don't know. So something will massively outperform Solana. But as a major crypto, I think Solana is the play for this cycle. But for those who don't like Solana, Ethereum's going to do very well, and it'll do better than Bitcoin, which will do very well.
Awesome. My dad will be super happy to hear about that, and it will be gloating again. I think I've got to up my Solana percentage in my portfolio. Speaking of it, I know there's one thing: you shouldn't ask a woman her age, and you shouldn't ask a investor his portfolio allocation. But I'm going to break the rules. I want to, no need to give specifics, but does that mean Solana is making up the majority? Do you have a little bit of ETH, and then is it shrapnel?
And I've been pretty public about this. I'm about 70% Solana, 20% ETH, 10% shrapnel, just more degen speculative stuff. And that's the bit I don't talk about, because then people assume you're shilling and you're trying to do that.
Yeah.
And so, I learned that from the last time around. So there's 10% of it, more speculative stuff. Stuff like Celestia's in that. That's a one that everybody's gotten. I'm only copying other people because people I trust are in it. So that's why I haven't done the work myself, really. I shouldn't be taking big risk in it, but there's people I trust in it, which is, doing the wrong thing, clearly, but that's fine because it's in the 10% of my allocation. But really, I'm hyper-focused Solana.
Awesome. Very cool. Now, with the everything code, it follows the 4-year liquidity cycle and the interest payments on the debt, and it's predicting that we see peak asset prices in late 2024 and 2025 because of the way it all works. Now, I wanted to pose you a question. Does this mean once we get to that point, is there an exit strategy that you're looking to take chips off the table, because then we're going to have that downturn, we're going to see monetary tightening, interest rates go up, and less liquidity in the cycle? Or are you not thinking out that far? Is there an exit strategy
through, but I don't know the answers, because I'm not sure that we get monetary tightening next time around. We need to see the structure of this cycle. If inflation comes down as far as I think, I'm not sure we'll see monetary tightening. We might see yield curve control. So we might see some tightening, then yield curve control, which is ongoing printing of money. So I don't know the structure of what the next down cycle looks like, but it's probably not as bad as the one we've just gone through. However, if it plays like I expect, because I'm not as young as you, I would take off a decent amount of lifestyle chips and run the rest. Because I didn't do that in the last cycle purposefully, because I wanted to keep accumulating through the full cycle. And that's really paid off for me. And that was a phenomenal strategy, because I'm at all-time highs in P&L. because I bought in the depths of the bear market, made the right switch to Solana, stuff like that, which is great. But sometimes, you want to take off lifestyle chips. For you might want to just keep compounding.
Gotcha. And I've got to give you credit. Back in November, when we were right at the bottom of the channel, that exponential chart, you were the one screaming from the rooftops, extremely bullish, and you were the only one that I saw that had super high conviction, and it paid off in a huge way. So that was an incredible call. Now, another question I wanted to ask, sort of on the same token, is as we get deeper into the cycle, I'm sure you're aware that returns kind of drift out on the risk curve. So we see Bitcoin run first, and we're seeing it play out pretty much in this cycle as well. We see Bitcoin run first, then we see it flow to Ethereum, and then Solana and all the altcoins get a run, and then NFTs. Are you going to play the cycle around anything like that as we sort of move through it? Are you going to start allocating to CryptoPunks and Bored Apes or NFTs or anything? Or is that a great way to fuck up this cycle, trying to get too cute with it?
Look, some people are good NFT traders. I own a whole bunch. Punks, apes, Beeple, Xcopy, all of the stuff you should own. I've got a bunch of that. But I'm not even sure I can sell them, or if I want to sell them. Some people will trade it and will do very well from it. There will be an epic NFT cycle again. But really, it's an easy way to fuck it up too. The best thing is assume that if they're going up, the whole space is going up. So just stick with the program. And again, if you want to do the NFTs, put them in that 10% bucket. I'm sure people can figure out a bit of extra juice there, but if it all goes wrong, it doesn't matter. Because if you do get it wrong and you put it in some random thing that looked like it was the biggest thing ever and that project doesn't work, then and it falls, 50% in ETH terms, you just halved your ETH exposure. It's like, no. That's a way to fuck it up.
Speaking of not fucking things up, that's a huge mantra that you have going into this cycle, is do not fuck this up. So I want to ask you, let's say you're a first-time investor, perhaps you're one of these financial advisors that is first getting into crypto or Bitcoin. You're not too sure about it. Do you have a list of rules that you would give to a new investor? They know a little bit about crypto. Maybe they saw it in 2021. They see it's coming roaring back. What rules would you give them, and some just basic principles to not fuck this up?
Firstly, have a plan and write it down. Write it down because you will lose your mind in the middle of a crypto bull market. And your plan might be, okay, I need to average in over the next 3 months or 2 months or 1 month, or just pull the trigger now. I'm indifferent to any one of those. It doesn't really matter. Even if it falls 30%, which is normal, it'll be back up. So don't even worry about price, where you get in. Then write down, I will expect, and I'll be grateful every time I have a 35% correction en route, and maybe I can buy some more. I will be grateful for that because then it's out of the way and we can move forwards again. So I actually like them because it's like, my God, it's done. Right, next, let's go higher. So expect that. Don't listen to your friends and FOMO because your friend is making more money because he's bought some toad meme that's gone up 57x and he's now flicking through brochures for cars. It's like, no, don't do that. Stick with your plan. Make sure it's about 80% of main assets. No, main assets is not some random currency that you learnt about that you think is going to be the next big thing. That's not a big asset. That's in your 10% bucket. It's like, is it Bitcoin, ETH, Solana, and maybe some of the, maybe XRP, maybe whatever. There's a group of 10 that are really big. It's not in like Bitwise's index. Don't bother doing it. Simple. If not, it goes in your 10% bucket. No FOMO, no leverage. You will be so tempted to go, well, maybe I can just lose some 3x leverage here. 3x isn't much, right? These other degens are using 100x leverage. 3x is fine. 35% pullback, you've lost your capital. People don't realize 35% is normal. Hell, we've had some 50%ers in bull markets before. So that's 2x leverage. You're out. So just don't fuck that up and stop trying to trade it. I literally don't know many successful, super wealthy investors that made it from trading. Paul Tudor Jones, sure, but he's probably made more money by owning an asset management business, this hedge fund, than he has from actually trading. Yeah, Stan Druckenmiller. If you think you're Stan Druckenmiller, go get it. But you're not. The easiest way is to be the moron who buys and holds. It's just the easiest strategy in a market that does, on average, like 140% a year in the largest asset. You don't need to do anything else. You don't need leverage. You don't need to FOMO into other stupid stuff. Just do that. And then the other thing is be careful not to lose control of your coins. That's the final thing. So you've got it right. Bought the right asset allocation. You're being careful. You're filtering out the FOMO. You're having some fun in your DGEM portfolio. You haven't got leverage. And then suddenly you realize you've got on some stupid Thai exchange that goes down. And you're like, oh, fuck, I've just lost everything. I've done that. MF Global in the old finance world, that old head of Goldman ran MF Global, the largest brokerage, retail futures brokerage. I had all of my money in it. And it went bust in 2 days. It's like, boom, gone. Took 7 years to get my money back. So, people in Mt. Gox still haven't got their money back. So that's the other risk that you've got. So whether you're using a ledger device, whatever it is, you need to have that covered as well. Another one with wallets. Another way to fuck it up is, oh, look, there's a mint of some new amazing thing. Quick, attach my wallet. My wallet appears to be empty. That's really simple to stop. You have, if you've got a ledger, you have 3 or 4 different wallets within your ledger. One is the one you expose to any shit like that. It has no assets in it. You transfer money in. You exchange with the asset out. You then have one where you are selling or buying your assets and you move that into another holding wallet. And that doesn't really hold your important assets in. And then your important stuff, you put in a third one. Just don't blend it all together in some big omnibus soup and then suddenly go, oh, I want to get that free JPEG. And before you know it, somebody's taken all of your long, hard savings at the end of 2025 when you think you're about to buy a house and you're not. You're going to buy a cardboard box and live in the streets. Or you'll find that your dad didn't fuck it up and you fucked it up and you have to go home and beg to him for forgiveness.
Yep. Awesome. I think that's a fantastic framework. And I think it's a perfect mantra for how big the opportunity that I believe that this cycle is going to be is do not fuck this up.
And why, this is a good point, Jamie, is why it's so important is this crypto opportunity is literally the perfect macro opportunity of a lifetime. It's been the best performing asset class of all time. It won't go into infinity doing this, but this is a very high probabilistic outcome that the next 2 years make life-changing money. Right? And most people who are young can't afford property, straddle with student debts, kind of people are drifting around, living in Koh Samui or whatever, right? Because nobody can really, you can't really settle down, even, all of these, friends of mine turned 35, 36, they've now got kids, they're like, shit, how do we afford kids' school fees? Could barely afford the house, all of that stuff. This is the opportunity. This is the chance to make some proper money. And so that's why I really care about not fucking it up, because listen, the more people we can help enter this new financial system, help us build it and can profit from it, the better. And we get to front run the institutions. You've been in since 2016. There's you front running BlackRock. Hell yeah, that doesn't happen. By the time Facebook's share, IPO, all the VCs and all of the high net worths have front run you all of the way. This is the other way around. And all of that money will come into this space. you just have to not lose control of your tokens. You have to not be buying some stupid frog with all of your net worth, where the institutions are coming for Bitcoin, Ethereum, and Solana. That would be stupid. Just don't be stupid.
Fantastic. Raoul, I want to be mindful of your time, and thank you so much. I want everyone watching to head on over and sign up to Real Vision. It will honestly be the greatest decision of your financial life. Also check out Raoul's YouTube channel, Raoul the Journeyman, and follow Raoul on Twitter. Also check out Global Macro Investor. Raoul, this was fantastic.
Yeah, hold on. We've got a special link for your guys, realvision.com/Jamie. That's free for Real Vision. There's a whole free platform. There's paid tiers. There's whole crypto research tiers. There's all sorts of stuff. But realvision.com/Jamie. We're minting a free Solana NFT, which is don't fuck this up, to remind people so they can keep it in their wallets. And every time you go into your wallet and you're about to do something stupid, you can look at that NFT and go, actually, maybe I shouldn't do it. So that's free, but you have to become you have to sign up for the free Real Vision platform to be eligible for it. So go and do that. You'll see it on my Twitter feed or on the Real Vision Twitter feed. Don't ever follow any other links. And realvision.com/Jamie. Go and check out Real Vision. It's really there to help you all. I built it for that. There's everything from AI tools to transcripts through to an amazing community of people around the world through to incredible content, both written and video. And it's there for you. So please take advantage of it. It's free.
Yeah, and I can vouch for it. It will change your financial future, and I could not recommend it more. Awesome. Thank you so much, Raoul.
As does your dad.
Yes, 100%. It definitely changed his future, and he'll be gloating forever about that. Awesome. Thank you so much for Raoul, and I'll speak to you hopefully again in the future when our net worths are a little bit higher.
Fantastic. All right, Jamie, wish you the best of luck.